I now hand the conference over to Mr. Siddharth Ramnekar from CDR India. Thank you, and over to you, sir.
Thank you. Good evening, and thank you for joining us on DCM Shriram Limited's Q4 and FY21 earnings conference call. Today we have with us Mr. Agri Shriram, Chairman and Senior Managing Director, Mr. Vikram Shriram, Vice Chairman and Managing Director, Mr. Ajit Shriram, Joint Managing Director, Mr. K.K. Kaul, Whole-Time Director, and Mr. Amit Agarwal, CFO of the company. We will commence the opening remarks with Mr. Ajay Shriram and Mr. Vikram Shriram, following which we will have an interactive question and answer session. Before we begin, please note that some of the statements made on today's call could be forward-looking in nature, and a note to that effect has been included in the conference call invite circulated earlier. I would now like to invite Mr. Ajay Shriram to give us a brief overview on the company's performance and his views going forward. Over to you, sir.
Thank you, Siddharth. Good evening, everyone. Thank you for joining our earnings conference call for the fourth quarter of financial year 21 and for financial year ending 2021. I hope all of you and your families are keeping safe and healthy. These are difficult times and we need to be very cautious. I will share my thoughts on the operating performance and strategic direction of our businesses. After that, Vikram will give you the financial perspective. Over the last couple of years, our strategic direction has been towards strengthening each of our businesses through integration, scale, optimizing costs, and rationalization. These steps bode well for growth of our businesses. The chemicals business has grown in scale, along with steps being taken towards downstream and value-added products, as well as cost optimization. Sugar business has grown in scale and integration and is more stable. Shriram Farm Solutions has closed its bulk fertilizer business and has grown the value-added portfolio. Bioseed has closed two of its loss-making international operations, and the product portfolio in India has enlarged. We continue our steps in this direction to deliver growth. On the operating front, our businesses have managed the COVID-19 pandemic in the last year with a lot of agility, which is reflected in the healthy performance during the year. Now we face another calamity of the second wave of the COVID-19, which is again making the economic environment uncertain. We are hopeful that we should be able to come out of it much stronger. Our comfortable balance sheet, cash flows, and diversified businesses allows us to handle uncertainties better and enable us to continue our focus on growth. I will now share with you the business-wise developments. First is sugar. India is structurally a sugar surplus country with annual production of around 31 million tons and consumption at close to about 26 million tons. Policy support by the government in terms of sugar exports and B-heavy ethanol production has helped keeping sugar stocks at reasonable levels. Our company now has two distilleries with a total capacity of 350,000 kiloliters a day to produce ethanol, which has, along with overall government policy framework, provided stability to the business. Government of India has aggressive plans with respect to the ethanol blending program and intends to achieve the target of 20% blend by 2025. This has opened up new investment opportunities for the sugar industry. The present ethanol supply during the year of 2021 has seen the rate reaching approximately 7% blending by March 21. In financial year 21, we had sold 1,251 lakh liters of ethanol for the year 2021, with 60% on B-heavy molasses versus 597 lakh liters in the last year, with 45% on B-heavy. This is a result of the Ajbapur distillery commissioning by end of Q3 last year. Cane crushing during the season, sugar season 2021, was at 553 lakh quintals versus 598 lakh quintals in the last year. The availability was lower given lower yields. Cane recovery on the funny molasses basis stood at 11.7% vis-a-vis 11.9%. The reason for lower yields and recovery was unfavorable climatic conditions. Total sugar produced in the current season was 57.9 lakh quintals versus 66.3 lakh quintals in the last season. We have contracted and sold large part of our 12.5 lakh quintals quota for exports for sugar season 21. Sugar inventories as of March 31st, 2021 stood at 31.3 lakh quintals as compared to 43.5 lakh quintals on 31st March 2020. Higher sugar sales in the domestic market as well as exports and ethanol production through B-heavy molasses contributed to inventory reduction. Now on the chemicals business. By the end of March 21, caustic soda demand from downstream industries had reached near pre-pandemic levels, with ECU prices showing quarter-to-quarter improvement by 10%, with a month-to-month increase. Utilization levels were at an average of 79% in Q4, touching a high of approximately 90%. International prices also witnessed an uptrend. However, their sustainability is yet to be seen. Products like hydrogen, aluminum chloride, and SBP had a positive impact on earnings. The investment in downstream products announced in Q3 financial year 21 will add substantial strength to the business. Our new 120 megawatt captive power plant will add to the earnings by the cost efficiencies. Our value-added growth areas, epichlorohydrin and hydrogen, are on track as per plan. Expansion of the aluminum chloride plant, we already have 60 tons a day. That's under expansion, and that's moving forward satisfactorily. Next is vinyls and plastics. Plastics business had high earnings in this year, led by global supply disruptions from mid-Q2 onwards, leading to increasing trend of international prices for both PVC and carbide. India imports almost 55 to 60% of its PVC and carbide demand, and hence closely follows international prices. The business also benefited from efficiencies owing to the new power plant at Kota and higher capacity of PVC as a result of debottlenecking done last year. Agri Inputs. The segment covers Shriram Farm Solutions, Bioseed, and fertilizer businesses. Q4 is a small season for Shriram Farm Solutions and the Bioseed business. For the year, Shriram Farm Solutions witnessed good growth across its product portfolio, with major growth in wheat segment, which is the market leader. Bioseed had broad-based its product portfolio over the last years to reduce dependence on any single crop. With a strong research base, it was poised for good growth in the medium term. Fertilizer business witnessed a fundamental change in the capital employed in the business. The fertilizer subsidy outstanding was at a multi-year low due to the additional subsidy allocation announced by the government during the year. This is expected to be sustainable. Fenesta. Fenesta witnessed good traction in the second half of the year, reaching pre-COVID levels of business. Trends in order booking in retail as well as project segments have been encouraging. The business is focusing on UPVC as well as system aluminum and is looking forward to enhance its product portfolio. The brand has retained its premium market position. Fenesta will continue its focus on improved service and product offerings along with geographical and channel expansion in both UPVC and system aluminum segments to accelerate growth. The new wave of COVID-19 is posing new challenges, the impact of which is yet to be ascertained. As a company, we continually take initiatives to deliver consistent and growing performance over the medium term. Our operations today have better resilience as a result of the steps already undertaken and will get stronger with the new initiatives planned. With this, I will now request Vikram to share the financial performance with you. Thank you.
Mr. Vikram Shriram, please unmute yourself.
Thank you. Good evening, everyone. I will take you through the financial highlights for our Q4 and financial year 21 results. During the quarter, our net revenues came in at rupees 2,191 crores versus rupees 1,917 crores in Q4 financial year 20, higher by 14% year-on-year. The growth was driven by healthy performance of sugar, PVC vinyl and Fenesta businesses. Last year, there was an impact on Q4 on volumes of our vinyl, Fenesta and chemical businesses as a result of COVID-19 related lockdowns announced in March 2020. Coming to segments, overall sugar business revenues were up 22% year-on-year. Exports stood at 10.8 lakh quintals versus 4.6 lakh quintals last year. This is more of a timing difference since on half-year basis the export numbers are similar. Distillery volumes were higher by 51% at 300 lakh liters along with better realization. In the chemicals business, revenues remained flat. While chlor-alkali volumes were higher by 7% year-on-year, ECU prices were down by 12% year-on-year. However, on a quarter-on-quarter basis, ECU prices were up 10% with upward trend seen throughout the last quarter. Plastic business recorded a strong growth of 109% year-on-year in revenues. PVC prices were up 70% and volumes up 67%. The prices continue to be firm in line with international prices. However, as global prices stabilize, supply stabilize, the prices will also tend downwards and normalize. Carbide volumes were down 66% to accommodate incremental PVC production. Owing to its swing capability, the business was able to switch from carbide to PVC, which was offering better returns. Q4 is a short season for SFS and Bioseed, hence their revenues are small with some variation. Fertilizer revenues were down 28% year-on-year. One reason is that gas prices were lower, which is a pass-through, and the second is that last year there was a reversal of provisions with respect to fixed cost reimbursement under NPS 3. Fenesta business continued to record healthy numbers with revenues up 40% year-on-year. The order book had a strong improvement of 20% and 25% year-on-year and quarter-on-quarter, a healthy sign for the business. Now coming to profitability for the quarter. In Q4 financial year 21, PBDIT stood at rupees 392 crores, higher by 10% year-on-year, supported by sugar and plastic segment. The new efficient 66 megawatt power plant at Kota, commissioned in Q4 financial year 20, translated into healthy savings in costs at the Kota complex. Sugar PBDIT was up 12% year-on-year, driven by better realizations and volumes from ethanol and sugar exports. Domestic volumes and realizations on sugar were low. Chemicals PBDIT was down 8% year-on-year, primarily due to lower ECU, although volumes were better. Plastics PBDIT stood at rupees 127 crores versus rupees 26 crores, driven by better margins due to higher prices. Fertilizer PBDIT stood at rupees 4 crores versus rupees 70 crores on account of provisions of rupees 53 crores up to December 19, which was reversed in Q4 financial year 20 as discussed above. Bioseed PBDIT stood at negative rupees 38 crores versus negative rupees 14 crores, primarily due to provision and write-off made for slow-moving cottonseed inventory and higher fixed expenses. Now let me share the highlights for the performance of financial year 21. Revenues were up 7% at 8,308 crores, mainly driven by sugar, plastics and SFS segment. Sugar business revenues were up 34%, primarily driven by higher sugar volumes. Domestic as well as exports overall at 78 lakh quintals versus 63.7 lakh quintals last year. Ethanol volumes at 1,251 lakh liters was 597 versus 597 lakh liters last year. Plastics business revenue was up 32%, driven by higher product prices. SFS revenues were up 13%, resulting from growth across product categories of value-added segments, primarily seeds. The BDIT for financial year 21 stood at 1,244 crores versus 1,295 crores, primarily as a result of lower earnings in chemical business, led by lower prices and volumes. The impact of lower prices of chemicals was significantly mitigated by higher prices of PVC. Sugar and SFS businesses contributed positively because of the factors stated above. On the balance sheet side, net debt as at 31st March 21 stood at rupees 180 crores versus rupees 1,624 crores at 31st March 2020. The key reason for reduced debt was lower sugar inventory and also lower fertilizer subsidies, as well as the prudence exercised by the company on capital expenditure given the uncertainties during the year. Overall, ROCE came in at 18% for financial year 21 from 19.8% for financial year 20, impacted by chemicals and restrictions on businesses in the first quarter due to COVID-19. Sequentially, ROCE improved from 17.4% in Q3 financial year 21. The board recommended a final dividend of 190%, amounting to rupees 59.3 crores. Total dividend for the year is 465%, which is 21.5% of the PAT, in line with the last year. Overall, on a full year basis, our performance, despite the unprecedented environment, has been quite resilient. We are happy with the progress that we had reported during the year, including reduction of net debt. On the whole, we have a robust balance sheet position and will ensure healthy liquidity position. At the same time, carrying out all the capital expenditure programs which are underway. This brings me to the end of the financial discussion, and we will be happy to take questions that you may have. Thank you very much.
Thank you very much. We will now begin with a question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rahul Veera from Abacus Asset Managers. Please go ahead.
Hi, sir. Congratulations for the wonderful set of numbers. Just have a couple of questions. First is regarding the bioseeds. So what is our portion of cotton within the bioseed? Largely it's cotton based only. And second question is, what is the strategy that we are going to adopt going forward? Because even with the good monsoons and good cotton acreage here also, we are hardly doing 1% EBIT margins. So what is the thought process there, sir?
KK, would you like to answer that? Babu?
KK.
See, cotton is still a predominant crop that we are having, but unfortunately, the competition there, one of the cotton hybrids is doing pretty well, and it's affected all the other ones. So, but we are coming up with new hybrids, and these hybrids are doing fairly well, and we are now in the process of scaling up those new hybrids, and they'll compete very well with the current competition. Okay.
Also, so there has been a recent price increase by the Indian government for the seed packets.
Could you kindly repeat that question?
Sorry. So there has been a recent price hike that was announced by the Indian government for the cotton seed packets. Yeah. So will that have a positive impact for us as well? There'll be some rub-off for us, or we are going to go for more market share and pass on all the benefits to the distribution chain?
We are looking forward to this year.
And of course, some of it couldn't be heard.
And of course, a larger coverage is expected to be under cotton this year. So both the larger coverage on cotton, as well as the acreage going on cotton, and the price both will improve as results. And as I said, some of our new hybrids are doing extremely well, and we hope to scale them up in this year, in this current season.
Just adding to what Mr. Kaul said, we also, our product portfolio also today is much wider. So corn and paddy today form almost 50 to 60% of our revenue, and cotton is close to about 20%. So I think where I'm coming from is that it's a much broader portfolio than what it was a couple of years back, where we were primarily a cotton-dependent business. So that way it has widened. So that's another part of the strategy that we're carrying. So we are quite prominent on cotton, corn, paddy, and vegetable. So these are the key crops that we deal in now.
Right. Fair point, sir. I'll come back in the queue, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Shalini Vasanta from DSP Mutual Fund. Please go ahead.
Sir, hi, this is Vivek Ramakrishnan. You had indicated... How are you, sir?
Fine, thank you. Yeah.
Okay, you had indicated capex of 1,500 crores. Can you give the split across the coming year to FY22 and 23? And in the fertilizer business, what can be done to improve profitability, given that there is going to be a lot of this energy-related costs which are going to be penal in nature? So these are my two questions, sir.
Okay. Regarding the capex part of it, in Q3, well, actually, even last year, we had taken approval from the board for putting up a 120 megawatt new power plant in Gujarat, in Bharuch and Shriram Agri Chemicals, which is under implementation. That will be commissioned by the Q4 of this financial year. Similarly, in the Q3 of last financial year, as I mentioned in my opening remarks, we had taken approval of the board to put up epichlorohydrin plants, to put up a hydrogen peroxide plant, to expand our aluminum chloride plant, and to put up a product development center near Baroda. So all this combined is about 1,500 crores capex. And as I mentioned, power plant is under implementation. For the other two, aluminum chloride, we've already got it in phases. We are 60 tons today. By, I think, another 3 months' time, we'll increase that to 75 tons. And by another 6 months after that, we'll go to 150 tons. So that will also expand over there. The epichlorohydrin and H2O2, these two plants, they've just been approved in Q3 last year. So we now are working on technology, working on the various advisors, various design consultants, and all that sort of stuff. We're moving as per plan. And that's expected to be commissioned, if I'm not mistaken, in early 22-23. In early 22-23. So I think they are moving as per plan. This is our capex plan. Regarding the fertilizer policy, I'll ask Mr. KK Kaul. KK, could you just please brief on the fertilizer?
Yes, as you already know that the energy norms are normative, and these norms have been set for each manufacturer. And as a strategy to maximize our profitability, we continuously work on reducing the energy consumption. So every year we achieve some energy reduction. Yeah, it's a different matter that after a period of time, the energy norms are again revised downwards. But today also we have a significant portion of our saving coming from the energy, and that's a continuous focus. Every year there are investments made to reduce the energy and also optimizing the operations. The other thing that we optimize for profitability is to maximize the production. So we also tend to produce more than the reassessed capacity. So that gives us an additional profitability.
Okay, sir. Thanks a lot and good luck.
Thank you. Thank you.
Thank you. The next question is from the line of Siddharth Mohta from Principal India. Please go ahead.
Good afternoon to you, sir. Sir, my question is on sugar division. I am very surprised to see that there has been no announcement from the company on any further expansion on the ethanol. The last capacity announcement that we have done, it was 3 years ago, even though the capacity it has come in Q4 FY20. Sir, so what is stopping company to be a bit aggressive in the ethanol segment when all the entire sugar players, they have announced their capacity? Some of them they have announced by 3 years.
Ajit, would like to answer that?
Yeah. Siddharth, just to clarify over here, 3 years ago, the distillery capacity in our company was 0. And within a span of 36 months, we have come from 0 to 350 kiloliters per day. And we are looking at options to debottleneck by 10, 15, 20 kiloliters at this point of time. But we're on the ball and we are alive to the situation, and we're looking at different raw materials and mixes, be it C heavy or B heavy or cane juice, to further enhance our output. I hope this clarifies.
Yes, sir. So do appreciate that in the last 3 years, company have put up the capacity. My only limited point, it was that the last capacity which has come, it was in Q4 FY20. And since then, it has been like around 15 months, so there has been no announcement, even though the company balance sheet is excellent and there has been a lot of initiative from the government side. Debottlenecking. Yes, sir, please.
At this point of time, Siddharth, just to clarify, the capacity of our distillery is in line with the crushing capacity. So the crushing capacity of the sugar mill, and the output from the distillery is balanced.
Okay, sir. So do understand that company is studying that how we can capitalize on the opportunity which is being presented. So I know it's a bit difficult question which I'm asking, but can we hear something in the coming 6 months on this ethanol front?
It will be difficult to say what's going to come up in 6 months. But as I mentioned to you, we are trying to see how to ramp up our distillery because the ethanol operations, and the government has been very proactive with the ethanol policy. And as has been mentioned in the opening remarks, they have preponed the 25% target. The 20% target to the year 2025. So we are alive to this, and we will be proactive.
Yeah. Okay, sir. I will further wait for any announcement coming from the company. Sir, on this bioseed division, sir, it has been like 5 years where our entirely EBIT, it has been around 20-25 crores. But company commentary, it has been quite consistent that our product pipeline, it is very strong for the last 2 to 3 years. But somehow it is not being reflected in our numbers. So what is going wrong actually? 5 years, it is not a very small period. Do understand that it is an R&D driven business.
Okay.
Well, as you mentioned yourself, that's an R&D driven business. To scale up the new hybrids, it does take time. And as Amit mentioned a little while ago in answer to another question, is that we are also trying to diversify into many other crops also. So we definitely expect, now we have new products coming up, not only in cotton. We have them in paddy, we have in vegetables, and we have in mustard and corn also. So we definitely now place much better to scale up those hybrids, because the initial experience with the last 1 or 2 years on a smaller scale has been excellent. So it does take time in these products, because these are research driven and then they have to be demonstrated in the field. But now we are quite hopeful that this year we should be seeing a significant improvement.
Great, sir.
I'll just add one more point to that, is that last year Kharif and this year Kharif, I'm not sure, but farmers become risk averse to trying new products due to the uncertainty brought out by Kharif. So in fact, other than the market leaders in all segments, new products launches by all players have been somewhat muted last year also. So this may have a bit of an effect, but yes, the pipeline is strong and it should come up.
Great, sir. That is very heartening to know. Sir, do understand that company generally don't provide the future guidance, but on this particular segment, if there is any milestone that we are looking, might be for FY23 type, a rough number, it would be very helpful, sir.
We don't give numbers, but if there's a normal 22, then certainly it should be significantly better. Unfortunately, this year has already, with the second wave of COVID, we are in a phase of uncertainty again, somewhat. Though it should definitely be better than last year.
Okay. Sir, regarding this 700 TPD caustic soda and 500 TPD flaker, which company have announced, but it has been put on hold. Sir, so any update on that front, even though the capacity, by the March end that you have mentioned that it has touched high 85 to 90%. So what's stopping company to go ahead? Because this related is not going to come in 3 months. It will take some time.
No, you're right. We debated this point a lot. At the board, we've had a lot of discussions on this. And we felt that as a priority, let's put our capex into value-added products, because commodity expansion is possible anytime. There are other people who are already expanding. So rather than, and as it is, if I may say so, our Gujarat unit in Bharuch, Jagadia Industrial Estate, it's the largest single location plant in the country. So we are, in fact, is very much on our agenda. We'll take a view at the appropriate time whenever the board feels so. But we would rather prioritize and put in this 1,000 crores plus this 400 odd crores of the power plant as a priority.
But cash flow continues to be quite strong. But I will take your points as a lot of capacity is coming. Sir, in terms of PVC, where we have seen the realization being quite high, and the March end realization, it is trading at 132. So the momentum, sir, it is still there in the month of April and May, sir?
Okay.
Yes, in April the realizations were good, but in May, with the onset of COVID, it started getting impacted. So we're not seeing the demand is getting destroyed. At this, how it comes up in the coming days is uncertain. But overall, there are still supply constraints, but this COVID has impacted the demand. So last few days, we are seeing a significant reduction in the demand.
Okay, sir. The company have announced the downstream chemical last quarter, and you have also touched upon that. So can we expect some more capex coming in a different specialty product, or we would wait for this unit to get commissioned, which is like 21 months away as of now?
You know, I'll be honest, any company has to measure and continuously, as a policy, continuously look at expansion. And considering we are so many businesses within the company, something or the other is under expansion or growth all the time. So we are not looking at only one or the other. We look at the whole company comprehensively and see which business can take which project at what time. So we continue with that. So we continuously keep visiting. If something good comes up, but you have to realize also that at the moment in our Jagadia Industrial Estate, the total land is going to be used up for putting up ECH and H2O2. That expansion is on. I've got a feeling that at least for the next 6 months, we are not going to announce anything else. That's my feeling. But you know, if something new comes up, something comes in, we are alive. We are waiting all the time. So it's not that we've taken a full stop or we've taken a running leap. We are there all the time to see what is best for the company.
Thank you. I would request Mr. Mohta to rejoin the queue for follow-up questions. The next question is from the line of Rohit Chawla, an individual investor. Please go ahead.
Hi, sir. First
Hello.
of all, congratulations on a good quarter. My first question is with regards to the impact of the COVID on the current quarter, the coming quarter, as well as how it shapes the outlook for the year, especially in the sugar segment. And since the situation across the country, especially in the rural areas, is also getting very severe. So my first question was with regards to that. And my second question was with regards to these plastic prices and how do we see them shaping up? Surely will they be able to sustain at this high levels or are we going to see them plateau down?
Ajit, you want to talk about the sugar and this?
Rohit, regarding the COVID in rural India, what you're saying is right. There is a spread, and our sugar operations have stopped. Our crushing stopped on 25th of April in our last factory. So we don't really have any impact at this point of time regarding the rural COVID. Our distillery operations are carrying on. There's no adverse impact over there because the raw materials are stored within the distillery and the sugar complex. We do really hope that the COVID situation does come under control soon and we're out of it.
Okay. Thank you.
Taking on the PVC.
Yeah, regarding PVC, yes, PVC prices in April were very firm, driven by the supply constraints. The prices in India are globally controlled by the global prices because we still import about 55 to 60% of the consumption here. But lately, since this onset of the second wave of COVID, we are seeing for the last week or 10 days now a significant reduction in demand. How will it shape in the future? It's very difficult to say as we go along. So right now, our capability to produce is not impacted, though there are a lot of constraints in terms of operating plants. But we are not impacted as of now. But if if this COVID wave becomes even more difficult, then I can't say for sure how do we go. But the SOPs that we have in place in terms of running our operations, producing, those are still working. But demand is being impacted, and though the international prices are still relatively firmer, and if this had not happened, the price firmness should have continued through this quarter. Now, what happens is very difficult to predict.
Thank you, sir. Just one small follow-up on the PVC business. What is the in a normal case, what is the margin which we are going to be the EBIT margin which we are going to be operating with, generally operate with?
Amit, can you answer that? Amit, you are on mute.
Yeah, so PVC, the operating margins would generally be in the range of around 15 to 20% EBIT margins.
This is like a normal case? Normal case or in this current year?
I'm saying in the normal scenario, the EBIT margins should be in the range of around 20%, 15 to 20%. Currently, yes, they are significantly high at around 40%. But normal, yes, that's the number.
Okay. Thank you, sir. Thank you very much. And
thank you.
All the best for the coming quarter.
Thank you. Thank you.
Thank you. The next question is from the line of Shriman Bhudoria from Unifi Capital. Please go ahead.
Yeah, good evening and thanks for the opportunity. So, a few questions on the chemical division. Firstly, I think despite the increase in realizations and revenue in this segment on a sequential basis, there has been a dip in our EBIT margin from about 24% in Q3 to about 15%. What has driven this decline on a sequential basis?
I think there are two, three things. One is in the last year, the prices of the ECU prices of caustic soda chlorine were quite low. They were under pressure. So I think that has come down, which is one. Secondly, the cost of coal has also gone up because freight became a major issue. And if you see international prices of coal, that went up quite a bit over the last 6 months. That has also impacted the margins for that. So I think these two factors have had an impact in terms of our margins for caustic soda chlorine.
Right. So sequentially, the realizations have improved for the caustic soda, right, from about 19,000 rupees a ton to about 21,000 rupees a ton, as we reported.
Yeah, it had gone up. In fact, last month it was that. In this month, until about 10 days, 12 days, 2 weeks ago, it had gone up even further. It went up to 22 plus to 23 between that. But I think, this impact of COVID is having an impact in all our businesses and in the entire economy actually in India. And no one can predict, but the demand is coming down right now. The pull has come down because one is suddenly finding that, whether it's the paper side or whether it's the other chemical side, there is an impact because of this COVID and because of partial lockdowns. And we don't know what's going to happen. Is there going to be an all-India lockdown? No one knows. And who would have thought, compared to what we experienced last year during the COVID times, in the worst times of April, May last year, compared to 4 lakh plus cases happening in India now. So, no one can say what's going to happen. But we sincerely hope that we reach the peak and start coming down in our numbers, and the number of infections come down, and the management is easier to handle compared to the tough time today. So in the next 3-4 months, we hope it eases off and the economy becomes a little smoother once again.
Sure, sir. So
just to add, I think to what CMD just mentioned in terms of fuel costs being higher sequentially as well. Also, we had a maintenance shutdown at a Bharuch unit, a partial maintenance shutdown. So therefore, the fixed expenses were higher. And the other reason also was that the downstream products, essentially SDP as well as aluminum chloride, their prices also came down sequentially. So I think those were the reasons why sequentially the margins were lower.
Okay. What was the period of shutdown, sir, in Q4?
About 6 to 7 days.
Right. And do we still face pressure on our cost of production in the chemicals division, or it has stabilized now?
To the extent of fuel costs, yes, there are pressures. Whether we same period or let's say FY21, where the fuel prices were lower, currently the fuel prices are higher. That's when there is pressure.
Okay. Sure. Similarly, I could also see in our plastic division, despite the good increase in the realization sequentially, the EBIT margins have been flattish quarter on quarter. Even in that segment, was there any inflation in the cost of production?
So there it was purely because of power costs, because the fuel prices went up.
That's the point. Okay, got it. A question on our sugar business. While we have exhausted most of our export quota for this cycle, like last year, is there a scope to do more exports in the sugar?
We are in touch with the government. We are in touch with the government to try and give additional allocation for sugar exports. Because the original allocation was 6 million tons of sugar, and roughly 5.5 million tons has already been contracted, and a bulk of this has already been shipped. The prices in the international market are quite firm, so we are in touch with the government, and we are hopeful that they do give us additional allocation.
Sure, sir. So on the incentive which the government gives on the sugar exports for about the 10.8 lakh quintals that we have done so far, a rough calculation seems to be about 65 crores. Is that accounted in our P&L in the last financial year, or we are yet to receive that from the government and not in the P&L?
Amit? Yeah, it is being accounted in the P&L. So it's accrued. As soon as we export, the income gets accrued. We may not have received the amount, but we have accrued it in the P&L.
Sure, sir. So, and finally, just wanted to reconfirm, on the timelines for our downstream expansion for 1,000 crores. You mentioned the revenues will start kicking from FY24, sir. Is that understanding right?
No. Amit, you have the exact date. When is the
aluminum chloride will... So the aluminum chloride will start functioning or will commence operations in Q1 of next financial year, which is FY23.
Okay.
And the ECH and hydrogen peroxide will be functional from Q4 of FY23. So they will have full year the year after, which is FY24.
Okay. Sure, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Shyam Babu from Sharekhan. Please go ahead. Shyam Babu from Sharekhan, your line is in the talk mode. You may go ahead with your question, please. We lost his line, so we'll move to the next question. The next question is from the line of Pratik Tholia from Elara Capital. Please go ahead.
Yeah, hi sir. Thanks for the opportunity and congratulations on good set of numbers. So a couple of my questions that I had have already been answered. Just one clarification. So you said, Amit sir, you said the cost on the coal cost has been going up. So you meant it's YOY or even QOQ it has been going up?
Q on Q.
Okay, so versus fourth quarter, even right now it is higher?
Yes.
That understands correct. Okay, thanks a lot. And so secondly, just on the on the sugar side, just another clarification. Did you mean that after the expansion of ethanol to 350 KLPD, we are fully integrated in terms of whatever molasses we are producing on the B heavy side, and there is no further scope for adding capacity on distillery?
See, last year we did a lower percentage of B heavy, and we were able to purchase some C from the open market. However, this year we've increased our B heavy percentage to the maximum possible, and also we don't expect to be able to get C heavy at a economical price. So to that extent, you'd say we are fully integrated at this point of time.
Sure. So there are some of the other companies who are also now fully integrated and are decided to sacrifice some of their sugar production and are putting up direct juice route plants. So have we thought in that direction? And also because government is now allowed producing ethanol via other feedstocks such as grains and some other products. So have we been thinking on those lines? Because clearly like you've already mentioned and some participants also asked, there's no pressure on the balance sheet front. And in terms of ethanol,
sorry.
Yeah.
So as in regards to juice or syrup as a feedstock, this is primarily being done in Maharashtra and North Karnataka and also in South India. UP does not allow use of juice or syrup at this point of time as per their excise policy. However, we are in constant touch with the UP government and the authorities to allow the same, and to hope that before the next season starts, that this permission will be given, and then there will be a further scope to divert further sucrose into ethanol and reduce the sugar production and improve our cash flows, improve the entire bottom line.
Okay, so because I thought one of your competitors in East UP has already been putting up additional 300 KL plant via the direct to juice route.
Yes, that's been announced nearly a year ago, but I don't think much has happened over there.
Okay. Sure, sir. So actually that's all from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, thank you for the opportunity, sir. My first question is in terms of the total PVC. What would be our market share in the domestic market? I presume ours will be entirely domestically sold, right?
India imports 55 to 60% of the requirement. Yes, we are selling only in the domestic market.
Right. So, sorry, what is the market share for us in terms of the domestic consumption?
Okay.
It's a very small market share of 3 to 4%. So we are not very, we don't have a very large market share.
Understood. And how has been the volumes according to you in terms of the imports for the entire full year FY21, sir? Has it come off sharply? Has it been in terms of the volume?
Yeah, in the month of April, yes, they had increased to what we had seen in the previous year, 1920. But in month of May, it's actually there's not been much import because the consumptions have dropped.
Sorry, what about full year FY21, sir, 2020-21?
There was an import of roughly about 1.4 million tons in 2021 and a domestic production of about 1.36. So the consumption was also lower at 2.8 compared to the previous year because few months we are impacted by COVID.
Right, understood. And with respect to PVC price, you said currently prices are stable. Have I got it right, sir? Or is there any
reduction recently? There has been a reduction by roughly about $50 for a week back. But as I said, the consumption is not there, so we don't know. This reduction is not even helping in the creating the consumption because consumption is reduced because of the other reasons because the downstream industries who use that are impacted.
Right. So what is the, in terms of the expectation, given the current situation we have in terms of the global market, the food producers, are they coming back on stream? What is our opinion? Are these prices here to stay, or you think there could be a moderation, a sharp moderation anytime soon?
Very difficult to say because it's been just 2-3 weeks since this has started happening, and we don't know when it's going to end and how it's going to end because this time it's a little different. It's not only hit the big cities; it's hit the rural areas also. So and the impact is also different. So right now we are impacted, as I said, substantial reduction in demand. But whether at the end of the month or next 2-3 weeks, we see some relaxation in terms of the restrictions that have been put in various states. If that improves, yes, the consumption should also improve. But right now, it's very difficult to predict because we can't forecast.
Right. I understand. In terms of the global price, any color you can provide in terms of how the production shaping up there? Have those US and Gulf plants come back in stream, or they still shut down?
So there were still constraints on the supply side before this COVID thing happened here. The expectation was the firmness in prices will continue through the Q1 and maybe part of Q2 also. But India is again it's also an influencer in the global consumption also. So whether that's going to have some impact on the global prices, as I said last week, they dropped the prices by $50. So that's something which we'll have to see as we go along.
Got it. And just one on the sugar segment, sir. You mentioned that the direct route is still not allowed at the moment in UP. Is that I heard right now?
Can you just repeat, please?
The ethanol production through the sugarcane route is still not permitted in UP?
Yeah, so the excise rules do not permit use of sugarcane or syrup for ethanol as of now in Uttar Pradesh, but we are in touch with the government authorities to give us permission for the same.
Right. And is it the case for even other feedstock or just for sugarcane?
No, there are 3 levels of purities which go into the distillery. One is the C heavy molasses, the other is the B heavy molasses. For these two different purities, permission is there, and we are making the ethanol from these two materials. However, for sugarcane juice or sugar syrup, which is a much richer sucrose content, at this point of time, permission is not available, and we talking to the relevant people to allow the UP millers to make ethanol from this route.
Got it. And just a clarification, in terms of the sugar price, how are the current sugar realizations and how are they about 10 days back? Have you seen any moderation in the sugar prices?
No, the sugar prices have been relatively stable at about 33.50 a kilo. Ex-works.
And that is stable in last 8-10 days, you think?
Yeah, there's no major change.
Got it. Thank you so much. I wish you all the best.
Thank you.
Thank you.
Thank you. The next question is from the line of Karthik Sambandam from Unifi Capital. Please go ahead.
Thank you for taking my question. Just a one query on the country liquors potential revenue that could flow in from Q1. You had mentioned last con call. So could you talk more on that? Hello?
I'm sorry to interrupt you, Mr. Ajay Shriram. We cannot hear you clearly, sir.
See, for FY22, the net revenue should be close to about 22 crores, 23 crores.
Sure, sir. And are we in line for finalizing the technology for ECH, which is supposed to be in bio-based with glycerin, right?
Sorry, for ECH?
Yeah.
Yeah, we are discussing with technology suppliers at advanced stages of discussion. So I think it should be done shortly.
Sure, sir. And just one last question. So there is a 120 megawatt coal-based plant that's coming in from Q4 FY22. So just curious, this is a big capacity, and how much would exactly be the addition to the cost saving that you're looking at?
Amit, you have the figure of cost saving because usually the new plants have a much higher efficiency.
Right.
Okay.
So yes, sir. The way we look at it is that see this plant where we are investing close to about 425 odd crores, it should give us a return in terms of cost saving close to about 20-25% at EBITDA level.
Sure. That's lovely, sir. That should be it, sir. Thank you so much, and all the very best.
Okay. Thank you, Karthik.
Thank you. The next question is from the line of Resham Jain from DSP Investment Managers. Please go ahead.
Yeah, hi. Good evening, sir, and congratulations on very good set of numbers. So I have one question on sugar. With so much of policies being framed around reducing the overall sugar inventory in the country, and I think more capacities are coming on the ethanol side, exports are also happening healthily. Do you feel that possibly by the next year, the closing stock level will come to a very comfortable level of, let's say, around 7 to 8 million tons, and then we will be and beyond that also next year, if more capacity comes in, the sentiment around the inventory levels should be more comfortable, and how will the policies be framed? Because then there will be a different set of questions on the sugar availability itself at some point of time. So just your thoughts around this.
You're right. See, the sugar inventory is very much under control at this point of time. And we do, as I mentioned earlier, we do hope that the government allows us to export at least a couple of million tons over and above the 6 million ton quota which has been announced so far. So for the years going forward, we're hopeful for a more proactive policy to allow cane juice in North India to make ethanol. And the rough consumption of sugar in India is about 27 million tons. Our production is 30, 31, 32 million tons. So we do need to divert more sucrose into making ethanol going forward on a consistent basis.
Okay.
Hello?
No, sir. My question
actually
was...
the cane crop is extremely profitable for the farmer. And if we see where the cane arrears have been even up to 25,000 crores. The farmer has not given up on cane and has stuck on cane in spite of high arrears. This is because the profitability he gets even after the delayed cane payment is much more than any other crop cycle, be it wheat, paddy, or any other combination.
Okay. So you think that possibly once the overall inventory levels come to a comfortable level and sugar prices also being decontrolled in a way, India may see a higher production of sugar from current levels also?
I don't see the sugar prices being decontrolled. As of now, for the last 3 or 4 years, there has been a monthly relief mechanism by which the sugar prices have come under control. I mean, 3 or 4 years ago, I think in the month of April or May, 3 years ago, the sugar prices dipped to about 25 rupees a kilo, which was very, very alarming. So by bringing this control of monthly releases back, the prices have come back to about 31, 32, 33 rupees, which is desirable. In fact, it needs to go up more to reduce the cane arrears going forward. And there is a group of ministers in the central government who have had deliberations to increase this minimum selling price from the current 31 rupees.
Okay, got it, sir. And so my second question is around the ethanol storage capacities, which was become a big issue somewhere in Jan Feb. Have those issues now resolved, and with more are the OEM fully geared on the storage side?
As mentioned earlier, the central government has really been very proactive on the ethanol policy. They have preponed the blending, the higher blending of 20% ethanol, which was due originally in the year 2030 to the year 2025. Consequently, the OMCs are also building up more capacity to store ethanol. Now, building up these capacities is not that quick and simple. I think it will take 6, 8, 10, 12, 15 months to happen. And as that happens, the offtake will improve in a more cohesive way.
Okay. But as of today, are you seeing issues on the storage side?
No, what we are doing is we're going to further depots from Uttar Pradesh. And depots which we normally wouldn't have gone to, we're going to further depots so that, we're able to clear our stocks on a consistent basis.
Okay. And that is getting compensated, or you are doing out of your pocket?
No, so 2 things over here. The OMCs have revised the transportation rates, I think 6-8 months ago, and we are in touch with the OMCs to further revise the transportation rates to what they would have paid to actually transfer petrol or diesel from X location to Y. So if the transportation rates comes to that parity, then it will be much easier to transport the ethanol to really distant states like Northeast, Tripura, Assam, etc., etc.
Okay.
Without any burden on the sugar industry. And that will also help in the achievement of 20% blend in the next 3 years.
Okay. Thank you very much, sir, for the detailed answers.
Thank you.
All the best.
Thank you.
Thank you.
Thank you. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah, namaskar, sir, and dhanyawad, sir, for this opportunity. Yeah. Sir, firstly, sir, as being told that there has been a price reduction in the chemical segment. So, sir, since PVC prices and all were already at the high end, so a $50 correction there. Has that same translated with the caustic soda prices also, sir? You were telling that the prices did move up above the $300 also end of April. So if you could give some more clarity on the price trends.
Amit, you have that details?
Yeah, so for chemicals, current prices they've come down a little bit. From 300, they've come down to about 280.
Okay, and end of April, they were above $300? As you have been told earlier?
See, I can't give you a specific time, but I think around 26th April when I checked, they were 300, and now as I check, it's about 280.
And sir, how have been the utilization levels for our caustic soda complex?
They've been good as far as April month was concerned, and as you mentioned in our earlier messaging during the call, that it's the May, how the demand moves, because we are seeing some demand destruction happening. So it will depend. It's very difficult to say what will happen, but yes, there will be some demand shrinkage that will happen. The quantum of it is yet to be determined.
Okay, so because since we are only in the first week of May, so if you could just give an guidance, how have the utilization levels flared up post the month of April exit?
So as I said, first we can't be such a determinant of what will happen in the quarter or what will happen in the month. So I don't think it's right for me to give you that number at this stage.
No, sir.
Right. So as I said, April went pretty well in terms of capacity utilization.
What were the numbers, sir, for April? If you could give some idea, sir, which trajectory?
Sure. April would be in the range of around 85%. However, May we'll have to see how it pans out.
Right, sir. Sir, of late, sir, this industrial oxygen, I think so. The oxygen part of it also, I think so. Some quantity has been diverted. So there has been an incremental demand for caustic soda, I think so, for the paper industry. Has that affected that also played out in the month of April because of the non-availability of oxygen by being diverted for medical purposes? Had caustic soda and hydrogen peroxide.
To my understanding, caustic soda demand by the paper industry or the chemical industry or all these is I don't think it's linked to the oxygen being taken away. I don't think so. But I'll be honest with you, I don't want to give an answer which I think it's a technical issue which our technical people will manage. I can't answer that. But the demand was going up in the month of April, as mentioned by Amit just now. And now I think in the first week of May, it's not the first week of May which is important, it is the COVID-19 which is important. And that is what is creating a high degree of uncertainty right now.
Absolutely, sir. And sir, on the ethanol part of the story, sir, as the earlier speaker did articulated about the further capacities which are going to come up are more will be starch based rather than sugar based. So, sir, in our distilleries, in the off season, are we also looking for some retrofitcations so that in the off seasons that could be shifted to grain and we can continue with the ethanol production even during those lean periods? Have we given a thought to it, sir?
As I mentioned earlier, we are utilizing our distilleries to the fullest in terms of 330 or 335 days a year, and we are balanced with our current crushing capacity. We are exploring the option of further expansion and debottlenecking, and we are exploring the option of looking at the procurement of grains or broken rice, etc., as alternate feedstock. And if we are able to do that, then we'll have to do a partial expansion.
Right. So two more short questions. Firstly, on the finance cost part, sir, this year there has been last 2 quarters there has been a substantial reduction. So for the next year, sir, what should we penciling in as a absolute amount for the finance cost, since the drawn limit also is down, and I think so capex will happen from I think so this quarter onwards. So what should be the finance cost for this year?
Saket, it's difficult to give you an exact number, but given that when we started FY21, we started with a net debt of 1,777 crores, let's say almost 1,800 crores, and we ended with 180 crores net debt.
This
year, since we are starting on a low base, and we are expecting our cash flows to be good, so we have not factored in so much of Corona right now. So obviously the debt, the cost should be lower than what we saw the last year. But exact amount is very difficult to say.
So this out of this 1,500 crore under implementation, how are these going to plan? How much will happen in the first quarter, second, third, and fourth in that phase manner?
I don't have that quarterly number right away. Obviously, as per our plans we have, but ballpark this 1,500 crores will get incurred more or less equally between the 2 years, maybe 60-40 or 40-60, that kind of number. But more or less is that kind of distribution between the 2 years.
60% for this financial year.
As I said, it can be 60, it can be 50.
Yeah.
Ballpark numbers.
Yes. Ballpark. And lastly, sir, on the fertilizer part, sir, what is the strategy now going forward to be money with lower gas prices and money this being a controlled sector? How is the company shaping up in terms of the fertilizer part? We are going to continue in the same pattern, or what is the foresight for us, say 2 years down the line for the fertilizer sector?
KK? I think you're on mute, KK.
Could you please repeat the question? I had got disconnected for a few minutes.
Sir, I am looking about what is our growth plan, or how are we going to move ahead in the fertilizer segment? This being a controlled sector, and I think so there was some effect of some reversal also that resulted in the lower revenues for for this year. So what is our strategy for the fertilizer segment going forward? And since the subsidy burden and all are now things of past as of now, so the way forward for the fertilizer segment, sir?
As of now, we don't have any plans to expand. We would be optimizing our efficiencies, reducing our costs, and maximizing the production that we can get from within the given assets. So as of now, there is no plan to expand capacity.
Right. Thank you, sir. Thank you, sir.
Thank you.
All the best, and take care, sir.
Thank you.
Thank you.
Thank you. The next question is from the line of Siddharth Mohta from Principal India. Please go ahead.
Yes, sir. Sir, again, so my question is within the sugar segment, sir, is there any scope to increase sugar crushing capacity?
We constantly working with the farmers to increase yield, increase the cane area, and then subsequently we will increase the sugarcane capacity. There is scope for sure, and this is very live on our agenda, and we do hope in the next couple of years we'll be able to increase our cane area to such an extent that we're able to increase our cane crushing capacity.
Okay. Sir, any figures, sir, that you would like to put, because you said that you have been looking that in the coming 2 years. But okay, but no capex capacity that is going to happen. It is more of an organic thing that we are doing.
Yeah, organic, correct.
Yeah. Sir, regarding the Shriram Farm Solutions, so you have taken a lot of strategic decisions which has led to an increase of value addition product, decrease in the bulk, and which is reflected in our strong performance at the operating profit. So do you think that the momentum that was seen in the last 2 years, that will continue further in coming 2 years?
Well, our focus in the Shriram Farm Solutions is under the vertical of seeds, under crop care chemicals and value-added fertilizer segment. And the business is looking at expanding under each of these three going forward. You know, when you see just the bottom line per se in any agriculture product, it has an impact because of the market, because of the monsoon, because of government policy at a particular period of time. And there is research involved in developing some of these products. So, you know, you have a good product, it moves well. But the objective of the business is to continuously keep expanding, keep growing, add value-added products, have a better connect with farmers, how to provide better technology to farmers, input and advice to farmers, so that farmers can increase their yield and their profitability. So our objective is to help the farmer, and consequently we become a product and technology supplier to the farmer. So this is, I think, which we do expect it to keep growing.
Yeah. So just one clarification, Amit sir said regarding the new upcoming power of 120 megawatt at Bharuch. Our capex is around 450 crores, and the cost saving, sir has mentioned 20-25%. So the simple calculation, it shows 80 to 100 crore would be our saving.
Yeah, at least 100 crores, yes.
Great, sir. Very nice to know. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Shriman Vidoria from Unifi Capital. Please go ahead.
Thanks for the follow-up opportunity. Had a couple of questions. One on the fertilizer segment. To the statement that is mentioned in the presentation, that the energy saving rate was lower due to lower gas prices impacting the earnings. I just wanted to understand this better. Does that mean that the sales happened ex of the subsidy that the government gives in the urea? Is that understanding right, or there is more to that? Please help me understand this.
See, the saving in energy is in the energy terms. It's in million kcalories that you save a certain amount of energy. And since the energy largely comes from the gas, so if your gas prices are higher or lower, and you multiply this energy saving by the gas price, it changes with the gas price. So if the gas price is lower, the value for that same energy that you saved at a lower price is lower in terms of value terms, in terms of rupees. So that's why this year the gas prices in that year were lower in that period. So the same energy consumption saving in million kcalories or the value terms and multiplied by the price becomes lower. And if the gas prices are higher, it will be higher for the same energy.
Okay, understood. And secondly, on the bioseed, multiple participants have asked question on this segment, but I'm just trying to understand a bit detail on bioseed. If I look at the last 5 years' performance in the bioseed segments, it's on the top line, it's been like sub 500 crores. And we have been taking multiple, provisions, write-downs in this segment. So one area you mentioned was we are coming up with a better variety of cotton seed than the competition. But in terms of building the capability in this segment, what steps are being taken? And in the medium term, could this segment have a meaningful contribution to our profitability? Wanted to understand a bit more on this.
Yes, you are absolutely right. As I said, that we have now some very promising hybrids, which initial 1 or 2 years at a lower scale have shown very good results, and we hope that we can scale them up. But to scale that up, also you need to build certain capabilities, and we are working on that. We have done an in-depth study. Where all do we need to build up those capabilities to be able to, do that kind of scaling up. And as we said, that we are in the process of taking certain measures which will help us to scale them up and build those capabilities, both in terms of our distribution, in terms of our sales and marketing, and in terms of the people also.
Okay. What milestones are we targeting, sir, in this segment? How should we track the performance of this segment?
So it's very difficult to say, but in the next 3 years, we expect a very significant improvement.
Okay. Other than cotton, what crops are we targeting?
We have paddy, hybrid paddy, and we are in corn. We have mustard, we have bajra, we have vegetables, and we also have wheat.
Okay. So thank you and wish you all the best.
Thank you.
Thank you, ladies and gentlemen. That was the last question for today. I now hand the conference over to the management for closing comments.
Thank you. Ladies and gentlemen, we thank you for your participation in our Q4 and financial year 21 earnings conference call. We have gained from our strategic steps taken over the last few years. Through our future growth initiatives, efforts will be on further strengthening efficiencies, augmenting capacities, and developing a stronger value-added profile across our businesses. Our strong balance sheet allows us to keep investing in growth even during these tough times. We are confident of a sustained growth over the medium term. During the COVID-19 pandemic last year, we took proactive steps to help our people, community, and the governments, including local authorities. This year, the impact is far more devastating, and we have accelerated our efforts in this direction. Once again, I would like to thank you for taking our time and joining us today. We wish you good health and safety to you and your families during the difficult COVID times. Thank you very much.
Thank you. On behalf of DCM Shriram Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.